Bank, but even ICICI Bank reported strong set of numbers. Tell us more.
Well, records galore in terms of ICICI Bank's performance in Q1 FY24. Quarterly ROA, that is return on asset at 2.39%, is perhaps the highest that you have ever seen over there. Gross NPA ratio and net NPA ratio are the lowest in last 8 or 9 years, coming in at 2.76% and about 0.48%. Deposit momentum is pretty strong. So while SDFC Bank was busy with its merger, ICICI Bank and Kotak Mahindra Bank have made good grounds over there. So deposit growth was 17.9% YOY, perhaps the best in last 9 quarters, and sequentially it was at 4.9% when compared to SDFC Bank's growth of 1.6%. PAT growth of close to 39% is perhaps the highest that you are seeing in last 4 quarters, continues to outperform SDFC Bank. The gap between ICICI Bank's quarterly ROA and SDFC Bank's quarterly ROA is now 35 basis points, which is a record in itself. So unsecured book is the highest in last 23 quarters, and that's aiding the net interest margin, and it is at 19.9% of the total loans. Restructured book is the lowest in last 10 quarters, watch list lowest in last 30 quarters, and overseas book continues to decline in the overall portfolio. It's now at just 3%. On the flip side, CASA ratio at 43.3% is the lowest in last 12 quarters. Risk weight asset to advances, that's increased and is on the higher side in last 11 quarters. Core operating profit growth on a sequential basis is a tad bit on the slower side at just 0.15%, which is the lowest in last 12 quarters. PNL, both in terms of NI and PAT, it's a beat on our poll. Back to you.
Okay, all right. That is about ICICI Bank. In fact, let's also hear out what the management of ICICI Bank had to say at their first quarter earnings con call.
The gross NPA additions were 5,318 crore rupees in Q1 2024. Recoveries and upgrades of NPAs, excluding write-offs and sale, were 3,511 crore rupees in Q1 2024. The gross NPAs written off were rupees 1,169 crore rupees in Q1 2024. Going forward, we will continue to operate within our strategic framework while focusing on micro markets and ecosystems. The NIM for this quarter was 4.78 as compared to 4.9 in the previous quarter and 4.01 in Q1 of last year. Yeah. Okay, I think we have been saying that the retail deposits rate of increase has been slower than what has been the rate of lending. So the Q1 2024, the sequential decline actually reflects the lagged impact of repricing of deposits, which has been sort of partly offset by increase in loans and investment yields. Secondly, I think as we have been guiding even in the previous calls, so overall decline in NIM was very much in line with our expectations. But broadly, if I look at, I think it will be good to look at the full year FY24 in the context of what we did in FY23.